State catastrophe pools cannot do it alone. There exists a disparity in the efficiency and cost effectiveness that states are able to provide a catastrophe insurance market for their citizens located in catastrophic prone areas. With more than 50% of our population living within 100 miles of the coast waters, and more than half of our states with coastlines, catastrophic wind exposure affects the majority of the country's population. Headlines today show that we are all affected by catastrophes, even if we're not in the affected areas. Many in non-coastal areas argue that they should not have to bear the burden of hurricane losses. But they will continue to bear the cost as long as they obtain insurance through regional, national, or international insurance companies who purchase reinsurance to protect themselves from catastrophic loss. Most importantly, the assistance that our government provides after a loss to affected areas in the form of emergency response and rebuilding is spread among all of the citizens in the form of tax expenditures. As a taxpayer, each of you pays the bill. A proactive plan should reduce these costs and is better than being reactive when it comes to effectively and efficiently spending our tax dollars. The sheer size of exposed coastal areas and the number of citizens affected when providing state wind insurance markets to states with large exposed coastlines, such as Florida or Texas, can be daunting. Some states with relatively small coastlines like Mississippi, Alabama, Rhode Island, and Connecticut face an even more difficult and unique challenge due to the smaller concentrated coastlines and affected population with less ability to spread the risk among state residents. Although Mississippi has made a recent sweeping positive change in its wind pool through the joint efforts of the state legislature, governor, and business community, it remains a daunting task for any small state to effectively handle its coastal exposure. Pools, citizens plans, and fair plans differ greatly in their approach to handling wind exposure among the coastal states. Many plans spread the risk in the form of assessments to their state insurance carriers that will not voluntarily provide wind insurance in designated coast areas. Other state pools temper the exposure with purchased reinsurance, which they must either assess to the companies or pass on to the consumer. Other programs include state-backed revenue bonds to capitalize and stabilize these pools, the cost of which may be borne by the consumer in the form of higher premiums or passed to the state taxpayers and ultimately to the federal government if the program or state becomes insolvent. Concentrated coastline exposure and relatively small size of participants in these small state pools can make the cost to operate the pools more expensive for smaller states than larger states. The basic principle of insurance provides that the risk be spread over a large, actuarially sound population, that they may be available in that may not be available in smaller pools because of the cost of reinsurance per insured much higher than in other states. The result is staggering costs for insureds in small state pools to bear and staggering exposure in large states that could have their large state potentially insolvent should multiple major storms occur in one season. By having wind and flood perils provided in the same policy in a national backstop program, as in H.R. 3121, you are spreading the risk among many geographically dispersed insureds in many states and have the ability to achieve a more actuarially sound and affordable insurance rate. Number 5, and last comment, lack of available and affordable insurance. In almost 2 years since Hurricane Katrina and the effects of the 2005 hurricane season, our Gulf Coast has seen a dramatic hardening of the insurance market. On the residential market side, most insurance companies have stopped writing homeowners insurance with wind included. As a result, the Mississippi Windstorm Underwriting Association, our wind pool, has seen its in-force coverage limits and the number of policies it writes in 6 counties of South Mississippi increase dramatically. In 2006 alone, in-force pool coverage limits almost quadrupled from 1.6 billion to almost 6 billion, and it continues to grow as most new residents of the Mississippi coast are forced into the wind pool. In 2006, as a result of Katrina's losses, a rate increase was proposed for wind pool residential property based on actuarially sound rates that would have increased wind premiums by 397%. Wind premiums alone for a modest $150,000 frame home with 50,000 contents would have increased from $1,421 to over $5,650. State and federal monies, thank y'all, have temporarily reduced the receiving benefits. And our increase was only 92%, or a $2,756 wind-only premium on the example I just gave. A home including wind before the storm. My example of the rate increase was even more dramatic for individuals that were written with a standard homeowners insurance policy that included wind before the storm, whose rates and deductibles were lower than the wind pool, compounding the insurance increase they had to pay. A home including wind before the storm, paying $900 annually, would now be paying close to $3,500 for home and wind pool, and would have seen the named storm deductible, their upfront portion, quadruple from a $1,000 deductible to a $4,000 deductible. A close to 400% increase in both premium and deductible. The negative effect this has had in providing affordable housing to fill new jobs as businesses come back online and new businesses are attracted to the area has left a problem not easy for us to deal with. In many cases, commercial insurance rates were up even more dramatically. A local public school district in Hancock County saw its premiums increase almost 800% to over $1.2 million in the year after Katrina. A $4 million residential condominium in Harrison County that made it through Katrina and completed construction several months after the storm was unable to purchase insurance at any price in the private market upon completion. A machine equipment shop in Long Beach paid $4,034 for $946,000 of property insurance on 3 metal buildings, contents, and $100,000 business income. Upon renewal, the premium was $31,984 for $800,000 coverage and no business income, which was no longer available. Less coverage, only minor damage in the storm, and a 792% rate increase. A restaurant and inn in Pass Christian paid $17,600 for $1,450,000 of wind coverage before Katrina, and this year was only able to get $1 million of insurance, and the annual premium was $44,430. Less than 70% of the original coverage, or 252% more premium. While all commercial insurance increases were not this dramatic, almost all policies, and the people in this room that are local, have had a significant increase in rate. The state wind pool saw frame commercial rates hit close to a 5% rate earlier this year for commercial frame buildings, which meant that when other property premiums for flood and fire were added, the total premium was approaching 8 to 10% of the replacement value of the property. This meant that premiums alone would pay for a new building in only 10 to 12 years. Conclusion. In summary, the current insurance process for dealing with catastrophe losses is not an efficient or effective process, nor has it been for recent years. As we face a heightened cycle of natural disasters, the likes of which we have not seen in recent decades, an opportunity exists to dramatically improve. Hurricane Katrina, Rita, and Wilma are past, thank goodness. But their impact still lingers in the affected areas and will continue to linger for some time to come. But natural disasters of their proportion can and will happen again. The Business Council and the Hancock County Chamber of Commerce have expressed their support for HR 3121 and similar concepts which would provide a national response to the lack of affordable and available wind coverage affecting not only Mississippi's coast, but millions of the Atlantic and throughout our country. Madam Speaker, thank you and your leadership of the House for taking your time and for your distinguished committee members to join us here today. Thank you.